First Commercial Credit has been around for 16 years. We initially close a client just about every day, and we have funded over 3,000 clients since the inception of the company, over $4 billion in invoices that we funded. So we fund invoices every day. First Commercial Credit provides transactional finance. Within that, there's accounts receivable financing, there's purchase order financing, there's inventory financing, there's international trade finance, there's in-transit inventory finance. There's a lot of instruments that we have to help our clients grow and finance their business that banks will not do. Many new businesses go to the bank for their business loan. Some of them are businesses that have already started and they're doing well, but they don't have the 2-year track record that a bank requires before they will even consider the loan. With us, as long as it's accounts receivable financing, the business can be 1 day old and pick up their first account and invoice their first invoice. Invoice number 1, we can finance that as long as it's on credit terms and it's to a credit-worthy account. Timing is everything, because if a client comes to us and says, I need to make payroll by next Thursday, will you have me funded? Yes. We're very fast, we're very flexible, and we lend more than the bank. Our underwriting procedures are very flexible. We have underwriters that are very experienced with many industries, and that's the key. You have to be very knowledgeable of the industry that your client is coming from, because there's certain attributes that each industry has, because there's new industries coming every day, and the procedure for billing is different than the traditional way. So in order to accommodate, you have to customize your underwriting process, and your operations, your back office operations has to be trained on how to accommodate this client to get them funded on an ongoing basis without any issues. We allow our clients to pick and choose the clients they wish to factor. Some of our competitors require all payments and all accounts to be processed through their system. We believe that our client needs cash flow at a limited basis. We want them to pay what they need, use what they need. And eventually, sometimes they want to try it out with just one client. This is something new for them. They don't want to just turn over all of their accounts. This is their life savings. This is their business. Send us one client, try it with one client. If you like it, send us another one if you like it. Eventually, they want to send all of us. And sometimes not even necessary, because 80% of the business that they do is probably with 20% of the accounts they have. So most of our clients just submit those 20% of the clients, and that's usually plenty of cash flow that they need. Partial funding of an invoice is unheard of. Most factoring companies want to take the whole amount, give the whole amount, and charge the whole amount. And I believe that we're here for our client, right? We want him to use what he needs. You ever go to McDonald's and they always have the same process? That's how some factoring companies are. And if you throw them something that's out of whack, they're not going to be able to process it. They're trained to do it this way only, and only this way, and stay and don't go off track, because if we do, sometimes it messes up. In order for a business to qualify for accounts receivable finance or invoice factoring, there's 3 main things that they need. They need credit-worthy accounts that they're billing. They need to bill within 30, 60, or 90 days for eligibility, and they must be free and clear of any liens. First Commercial Credit specializes in many industries, but what we've seen, the most common industries that come to us on an ongoing daily basis is trucking companies, temp staffing agencies, manufacturers, and distributors. Those are the majors. For our trucking clients, trucking companies bill on net 30 days, and their daily cost is fuel. And sometimes they may get a spike in business to the point where they're not able to sustain their fuel operation. So they come to factoring companies to give them a consistent, predictable cash flow, right? An additional service we have for trucking companies is fuel cards, and that gives them a discount at the pump. Other additional services would include fuel advances, which gives them upfront money to be able to process a load prior to billing. As far as for temp staffing firms, temp staffing firms go through unseasonal sales sometimes. They bill on net 30. Their customers usually pay 40 to 45 days And the number one cost that a staffing agency has is payroll and taxes. With factoring, they're able to smooth out their cash flow and get a consistent payroll. Another thing that we offer for temp staffing agencies is actually payroll funding, which is funding prior to invoicing. Sometimes they put on more staff than normal, and they have to come up with more payroll money before they're able to create that invoice and factor it. And lately, manufacturers and distributors are coming to us for factoring because the economy is growing, and there's going to be more and more demand for receivable finance, because as companies get out of that even sales pattern and start to get a spurt in business, it's going to knock out the cash flow. And they're going to bill more on credit terms, and they're going to need to pay suppliers, and they're going to have that cash flow gap, and that's why they're coming to First Commercial Credit for funding. If your business is growing and it's billing on credit terms, eventually you're going to be running out of money. You're going to need to continue to pay operations, fixed expenses, payroll, suppliers, and you're going to be billing on credit terms, and all you have at the end is a bunch of invoices that need to be paid, and you have no money in your checking account to pay your suppliers or payroll or anything. So at that point, that's when these businesses come to First Commercial Credit. We initially fund all the receivables, or just about all the receivables they have on hand. Then they start submitting invoices on an ongoing basis to continue their cash flow and their growth. There's two parts to that question. One is the underwriting process, and two is the relationship process, right? So what's the difference? Number one, a loan, you have to have collateral to pledge for a loan. You have to have very good credit score. The company has to have very good credit score. You have to be in business for 2 years. That's the underwriting process of the bank loan. After you get the bank loan, you have to commit to making payments for that loan. Regardless if you have cash flow or not, you still have to make that loan, otherwise you go in default. In invoice factoring, it's not a loan. It's an asset that the business already has, the invoices, and you're selling them on an ongoing basis. And a factoring company is purchasing the invoices on an ongoing basis. So the factoring relationship is never on the balance sheet as a loan, because you have invoices that are pending to be paid, and as soon as you sell them to the factoring company, it becomes cash. That's the difference. First Commercial Credit has a very simple process in setting up a factoring account. We could set up an account in 3 to 5 working days. All we require is no liens on the business, you have to be billing creditworthy accounts, and you have to have receivables to fund. Once your account is set up with us, you can log into your account and see every invoice that you've submitted, which invoices are pending for payment, which ones have been paid, and the fee that applied to each invoice that you submitted. All that in real time. Invoice factoring is a financial method that our clients use that provides immediate funding for the invoices that they bill on credit terms, instead of waiting 30 or 60 or 90 days to get paid. So First Commercial Credit provides immediate funding on these invoices so they can have their cash flow.